Good evening, everyone. Thank you for joining us this evening. I'm excited. I'm actually joined by my two partners at eXp Realty, Andrew and Gurpreet, this evening. The reason why we're so excited is because we're doing a deep dive into all things pre-construction. As you're aware, in the current market today, there are amazing opportunities, but we've actually cherry-picked one of the most exciting projects in Mississauga right now in the Lakeview area to highlight, as well as a masterclass on opportunities to be successful as a first-time home buyer or an investor in pre-construction in 2024. So over the next 20 to 25 minutes, we're going to be unfolding and peeling back some exciting layers on how you can be successful, an amazing project that you want to be able to showcase and invest in, and give you an opportunity to ask us questions. Three leading industry professionals in the space that'd be happy to give you as much insight as possible to ensure your success. So let's just jump right in. Let's have some fun. So what you can expect from the conversation this evening is that we're going to be going over and introducing ourselves, make sure you know exactly who you're connected with, give you an understanding of exactly what pre-construction is. If you've ever left your home and you live in the GTA, you're surrounded by amazing tall buildings, and all of those had the opportunity for investors to purchase through pre-construction. So we'll touch base on exactly how that's a benefit. As the next opportunity, we'll be talking about in a great project and why pre-construction is always a good opportunity to invest in, and some real savvy mortgage and investor tips on how to take advantage of current market value and ensure that you are rebated cash that has been expended out of pocket if it's a solution that you want to explore as well. Okay, so we're going to start by just making sure that everyone understands exactly who you are joined with this evening. Good evening, everyone. My name is Mac Daniel Phillips. I'm actually a mortgage broker right here in the GTA, and I work for Dominion Lending Centers and operate my own company. I'm actually the owner and operator of Phillips Mortgage Inc. The reason why I'm so passionate about connecting and offering subject matter on this particular topic is because I'm also a fellow investor. I found and saw the writing on the wall years and years ago in the GTA that pre-construction and just becoming a multifamily investor is certainly going to be a great way to build and generate generational wealth. In my business, just where I have the most amount of fun and have invested my understanding and knowledge around is firstly focusing on investors. So if you're someone that has a single family home now and you want to expand into multiple properties, whether that's single family or multi-residential, that is really a sweet spot for me. Secondly, as a business owner myself, when I walked into the big green guy myself years ago, I left without a mortgage. And I wanted to make sure that when I also joined the industry and became a finance coach for many, that I had the ability to best support business owners just like you. And then thirdly, around pre-construction, and what we're going to be discussing this evening is, all things pre-construction, making sure that you understand how it works, what the benefits are, and how you can gain access to your equity when you're ready to. On to you, Gurpreet.
Awesome. Thank you, guys. Thanks, Mac, for having us. My name is Gurpreet Thin, guys. I've been a realtor for over a decade now. Prior to that, I had 15 years in financial services experience. I'm the numbers guy who loves to help people find their property and start building their real estate portfolio. I take a very analytical approach, but I'm also an empath, so I'm a bit of a unicorn for our industry. I'm joined with my business partner and good friend, Andrew Izard. Andrew?
Hey guys, Andrew Izard here. I am a vice president of operations and sales at the Rise Group. G and I had met about a decade ago working at a company called condos.ca, where he was part of the board of directors for business development. And both of us were actually top producing agents there for over 3 years. I too have over a decade of experience in the real estate market and specifically condominiums. So this is definitely in our wheelhouse, and it is definitely something that we know a little bit about. Pre-construction for a long time has been something that I haven't really been pushing to my clients. And we'll get into a little bit about why I think the market's changed in terms of pre-construction, and why we're super excited about this project Exhale that we'll be discussing.
All right, guys, I'm going to kick it off. So let's get to the basics and just define what pre-construction is. I'm going to summarize this slide in about 2 sentences. At the end of the day, when you're purchasing pre-construction, you're buying a brand new unit, a condo or a home off plan. So you're buying off a floor plan. It's really exciting because you get something shiny and new, and you get to pick everything from your finishes. You can have your choose of layouts, things like that. But there's a lot involved in terms of picking the right project that's going to maximize your investment as you move forward. Some of the benefits we have, obviously, you're getting a brand new, modern, cutting edge unit. These days, the builders are also making a lot of these homes and condos smart enabled for all those social media needs that people have these days, and your smart fridge and all that. One of the biggest advantages, in my opinion, of buying pre-construction is you get to extend the deposit structure out. So you don't have to come up with 10, 15, 20% up front for your purchase. You can have anywhere from a year to 3 years to get that 20% together. And so it allows a lot more affordability and ease of hit, or whatever you want to call it, on your wallet and your monthly budget. It's a much calmer experience than getting caught up in, getting in a car, going to showings in the snow, trekking snow throughout strangers' homes. You got your kids kicking and screaming. You walk into a nice sales center. It's a much calmer experience. You have a private appointment. The staff and the builder are usually there to walk you through all the finer points of the property. And you get to choose your unit or your lot, and you go from there. And then one of the next things is, obviously, when you're buying resale, you're kind of committed. The second you sign on the dotted line, you are bound by that contract. With pre-construction, we do have some advantages. It's a cooling off period. This does apply in particular for condos, but you have 10 days to do your due diligence. Take that document, that agreement to your lawyer, have a thorough review, get your finances in order, make sure you're going to be okay for closing that condo 2, 3, 4 years down the line when you're ready to close. The biggest, in my opinion, price appreciation. You put down your down payment over that deposit structure, and you've got 3 to 4 years typically of growth without having a mortgage and any other commitments, which is huge. And in the GTA, you're looking at an above average rate of growth over the last few years. And then obviously buying new, you get the carry-on new home warranty. That will cover your new purchase from anywhere from a year up to 7 years on structure, on mechanical, on workmanship. And that's a huge peace of mind for brand new homeowners. Right. Now, I know what you guys are thinking is, how do I know if it's the right investment? We're not agents that come out here and push every single pre-construction project on you. I'm sure we all get those emails every week. We're not those guys. We like to look at 5 main things on a project. Number one, you have to have access, and you get that by having the right realtor on your side, right? This business is all about relationships. That's true for our clients. It's also true for our developer friends. Number 2 is the incentives that relationship opens up for us. These are things like a flexible deposit structure, preferred pricing, pick of units at the start before anybody else gets access. Those are just to name a few. Location in real estate is always number one. And so where the unit is located, is there growth projected in that neighborhood? Is it already up and coming? Has it already arrived? Those kind of things will factor in. Then we have the actual reputation of the builder. People take this one for granted. There's a lot of builders, especially in the news these days, big builders, who unfortunately got caught. They were over leveraged. And so you want to have a realtor that understands that builder's reputation and will keep you away from the guys that aren't doing it right. And obviously the best investment, the more time you have to completion, the better. Again, it really plays into the growth that you have available to you for the project and that price appreciation before you have to commit to paying down that mortgage, right? What we've got for you guys is we've handpicked a brand new project that's coming out in South Mississauga in the Lakeview area. It's called Exhale Condos. We've got a little intro video for you, and then Drew's going to take it away for us.
All right, we got the most handsome guy in the crew going over to Exhale to introduce the developer. So I recorded a quick video, and I just want to play it for you here because I talked with Alex Cesario, who is the one of the co-founders and principal at Brixton Developments, the Exhale project. With the Rise Group, we are here with Alex at the Brixton Sales Center for Exhale Condos. I want to introduce Alex here and have him tell us a little bit more about his Exhale project.
Yeah, absolutely. Well, first, let me tell you a little bit about Brixton. So, Brixton, we are a full-service real estate development company. We have projects that we completed throughout the entire GTA. Just last year, we were nominated Builder of the Year, and we are super excited to be talking about Exhale today.
So tell us a little bit about why you chose Mississauga specifically for your next pre-construction project.
Absolutely. We've been really looking to get into the Mississauga market. Obviously, Mississauga, one of Canada's largest cities, fastest growing cities. We couldn't be more excited to actually to the market, specifically at Lakeview. Lakeview definitely has so much to offer, this site being the gateway into Lakeview, so close to transit, so close to Lake Ontario, beaches, golf course, retails. It really has everything right at this corner, and we couldn't be more excited to have Exhale represent Lakeview.
Awesome. So tell us a little bit more specifically about the building in terms of like number of units, height, like amenities, that kind of thing.
Absolutely. So the building's an 11-story boutique condo. We have 284 condo units. We have ground floor retail that faces Lakeview. We have a few ground floor townhomes, and we have such a robust amenity package. We have a gym, we have a party room, private dining, co-work space. We have 2 outdoor amenity areas, one on top overlooking Lake Ontario. We have a kids room and so much.
Awesome. And can you just tell us about why you chose to work with us at EXP and the Rise Group specifically?
We're super excited to be working with Rick and the Rise Group. Your dedication to getting the clients the best deal is really, truly impressive. And, you know, what a better partnership to work with, because we are a firm believer that customers should come first. And we have a fantastic customer care department that really matches up well with your servicing your clients. So I couldn't be more excited to be working with the team.
Tell us about pre-construction and like, you know, why you think pre-construction is the business to be in, and how that makes, you know, for a better investment for end users and for customers alike.
Well, you know what? Pre-construction is such a great way for first-time home buyers or first-time investors to really get into the market. We have really flexible deposit structure to work with every purchaser. Furthermore, we believe pre-construction is a great way to see appreciation of your asset while not having to close on the property. You really not only see appreciation in your asset, but you also see rental appreciation if you're deciding to hold it as an investor. So we really believe now is the time to buy, and Exhale is the place to buy.
For sure. And we agree. We think the exact same thing. And that's why we partnered with Alex and Andrew over at Brixton and the Exhale Condos, because we love the project and everything about it. So I just wanted to thank you for your time today and having us, you know, over to your sales center and explaining a little bit about it. And we look forward to working with you guys very shortly and get some units sold. Awesome. Thanks. All right, guys. Well, that was a quick video that I recorded a few days ago at the sales center with Alex over at Brixton. But I just wanted to go over a little bit more about the project. This one's really near and dear to my heart. Like G had said, you know, I've been around condos for, you know, over a decade now. And pre-construction is not something that I really pushed for a long time. But, you know, a combination of a few things are happening here at the project at Exhale. Location. As G mentioned, you know, this is one of the biggest parts about buying a pre-construction condo is you want to find something that's bulletproof. And where Exhale is located it's just inside the Mississauga border, which helps in land transfer tax and When you buy something in Toronto in the 416 proper, you need or you have to pay 2 land transfer taxes. There's a municipal land transfer tax, and then you have the Ontario land transfer tax. This one is just as close to Toronto, but just inside that Mississauga border to help you avoid that. And that really helps in 2 things. For first-time home buyers, it alleviates a little bit more of that cost up front. And in terms of investors, it keeps the the cost down in terms of a cash flow. Also, the location. So we're right across the street from Marie Curtis Park. Marie Curtis Park is a huge waterfront path. It's connected on the Toronto Waterfront Trail. So you can go as far as Whitby, Ajax, and then go as far the other way as Burlington on the Waterfront Trail. And your access steps away from there. You're a quick drive up Dixie Road to the QEW, which is right at the junction of 427. You have Sherway Gardens right there. You got Dixie Value Mall right there. You're along the Lakeshore line, so the buses are right there. You're a walk away from Long Branch Go Station, as well as the Long Branch Hub for streetcars. You have everything from Port Credit on one side to Long Branch and New Toronto on the other side. So you have all the shops, restaurants, everything you want in terms of amenities. It's all right there. It's quiet. You have 2 golf courses right above you on the north side. So you have the Toronto Golf and Country Club, which is private. And then you also have the Lake View Golf and Country Club on the west side, which is a public course. And they're both beautiful. And you have views from on the south side of the lake and on the north side of both of those golf courses. So for me, location is absolutely stellar. Project details, Alex went over them a little bit in terms of is the nitty gritties. The address is going to be 1381 Lakeshore. So it's literally on the corner of Dixie and Lakeshore on the northeast corner. Units are starting from the high 5s is what we have available still. There's 284 units in the development. Your maintenance fees plus minus 69 cents a square foot. And occupancy is hopefully going to be at the end of 2026. But a little tidbit that Alex actually told me on Monday that isn't to the public yet, but he said I can mention it, is they are looking to have shovels in the ground March 4th. So they have a date, they're putting shovels in the ground. So this isn't one of those scenarios of are we going to be building it? What happens if I give my deposit? Is that money going to, come back to me? Are they going to build it, or is it just going to fold and keep going? As we've heard in the news, this is very much going forward, and it's a pretty safe investment in terms of that. Now, in terms of the deposit structure specifically for the Bricks and Exhale project, we got $5,000 that is going to be needed on signing, and then the balance of 5% in 30 days. And they've extended this deposit structure to do 1% every 90 days, and there's 10 of those, and then you have 5% at the door. So it's a super, super flexible and highly attractive deposit structure for somebody who's looking to get into the market and doesn't have a lot of capital up front. Now, in terms of incentives, as G mentioned, having access and having the right real estate agents work for you and having the relationships with the developer is very, very key. We have developed a fantastic relationship with Alex and Andrew over at Brixton, and we've negotiated a bunch of these incentives for you. One of them is the extended deposit structure that I just talked about. We also have very, very exclusive VIP pricing. We are saving anywhere from, on the low end, $30,000, on the high end, $74,000 per unit. We have the development charges capped. We have free assignment, and we have the right to lease during occupancy. And then we have a total of $10,000 discount on parking, and that's available for the 2-bedroom units or larger.
Okay. Thank you, Andrew. So, guys, what we wanted to do is dive in with some real-world examples for you. What we're going to do is we're going to go through a first-time buyer looking to get into their market, and then we're going to jump into an investor unit, a small 2-bedroom that's going to maximize their rent and growth for them. So I'm going to jump in this first-time buyer. I am the numbers guy, but I tried to keep this as simple as possible. That deposit structure that Andrew talked about, you would be due $5,000 at signing, like he said, another $27,000 in 30 days. And then every 90 days after that, you would have to come up with just over $6,400 every 3 months. And then you have, once you get the keys to get your occupancy, it's another $32,000. So you're all in for about $128,000 on your first unit. And we're assuming rates are going to go down. I know we've been fighting inflation over the last year and a half, and the rates have really jumped. We do anticipate interest rates to be coming down over the near long term, I guess you would call it. And maybe Matt can speak to that in a little bit. But what we have here, guys, is some options for you as a first-time buyer. So once you're ready to close within 3 years, you actually have three options to you. The first would be you've waited 3 years for this dream home, your first home. You move in, you start enjoying the neighborhood, the amenities that Andrew mentioned in all the neighborhood amenities. You get to use the golf course. Maybe you want to take advantage of all those trails, Marie Curtis Park, the lake. I don't know if it's going to be safe to swim there 3 years from now, but all those things are there for you. And one of the advantages I highlighted earlier, that price appreciation. Historically, Toronto grows at 4% a year. Now, what we've seen over the last 10, 15 years has been phenomenal growth. We got double-digit growth for a good decade there, where we were close to 10% a year. Now, we're going to go conservative for you here in this scenario. At 4%, that unit that you're purchasing for $500,000 or $600,000, you're going to get growth of $25,600 on that first year, which is fantastic. That's pretty much almost 5% of your down payment that you've recaptured before you've even started your mortgage. The beauty of this project, we've got another 2 years of growth. So year two, you're going to get another almost $26,700. And then year three, $27,000, almost $800 there. So before you even start paying down a mortgage, before you even go to the bank to sign the paperwork, you should have added close to $80,000 in equity on this project, which is about 2/3 of your down payment, right? So one of your options would be, hey, maybe you've had a life event, you met the girl of your dreams or the man of your dreams. You need a bigger place. You turn around and you flip that. Or you give Mac a call, you take option 3. Mac, I need to close on this condo. I also would love to pull out as much equity as possible. And Mac can talk about those strategies next.
Yeah, thank you very much for that handoff, Gurpreet. I did want to just highlight one area, how this project is going to be very different from some of the other investments that people are getting into. And the biggest advantage that I've noticed is that the fact that we're selling properties right now at market value. You're not having to wait for the project to actually come up to, the actual resale value to come up to where the price per square foot of this project. So as you actually realize gains from the purchase price, those are real actual gains that you'll get in the resale market at a later time. I've actually seen quite a few projects where they're being sold at such a premium above resale that you actually don't appreciate any opportunities for gains because you're just hoping to get to what the market already is at. So definitely something that I wanted to highlight. Around owner-occupied homes. So for anybody who's listening who is interested in purchasing a pre-construction and putting down that full 20%, that does not mean that you can't still qualify for CMHC insurance and actually close the property with just 5% down. I'm sure a lot of people are thinking, hey, Mac, how's that even possible? Essentially, all it is that if you qualify for the mortgage amount that you're looking to purchase and you have the income and the credit, we can actually simply move forward as if it's an insured purchase. And that entire 15% down payment that is no longer needed because we're only using 5 as the equity is simply rebated to you at closing. So there's no need to do a refinance. The lawyer's office would simply give you a large check in cash at closing. Okay. The second is that when you're doing an insured purchase or you have the ability to close this pre-construction property as an insured investment, little known fact in the mortgage industry is that you actually get the most competitive rates on an insured buy. I know it's counterintuitive to the way that most people think. Larger the down payment, we all think that actually de-risks the application, but it just does the exact opposite. Because the insurers, or in this scenario, CMHC, would actually back your loan, it actually de-risks the application further, and you actually get access to the most competitive rates. So that's something you really want to keep in mind. But if you do want to close the property conventionally and leave that 20% down payment in the property, you absolutely can, and you would close what's called conventionally. The last is that when you're looking to purchase an owner-occupied home through pre-construction, you actually have the opportunity to leverage current market value at closing. So we would do in this scenario, and speaking of easy numbers, if you purchase a property at $500,000, it's to increase up to $600,000 at closing. Your purchase price at closing would be indicative of where the market is today, and all that additional equity that you've put into the property can be accessed immediately at closing, and can take advantage of a lot of the additional out-of-pocket costs associated with closing a pre-construction property. Something else that's really strategic, especially for the investors on the call, is that modeling the appreciation in this property, and Gurpreet was very modest in the approach, as we do know that the second interest rates come down over the next 3 to 6 months, we're going to see a massive attraction back to the market, and 4% I think is certainly going to be below what many expectations could be. So the first thing is that you want to keep in mind that as an investor, you can always access up to 80% of the current market value. So if this project is to appreciate, as many are forecasting to, what you can do at closing is actually offset a lot of the additional costs that investors are typically prepared for. Any cost that is realized at closing can actually be offset by the appreciation in the home. So things like HST, that's an additional $24,000 that the average investor would have to pay up front. Land transfer tax. Andrew did mention that we are in a more modest area with respect to land transfer, but that doesn't mean by any means that it's cheap. You're still looking at closing costs, or typical for a pre-construction property, anywhere between 1.5% and 3% total closing costs, including the HST. Land transfer tax can also be included and built into the mortgage, considering the appreciation. And then the last one, and what I wanted to kind of circle back with a few points on why this project is so successful and going to be so successful, is because it's really there to protect you as an investor. Cap developmental fees, that is a hugely important thing to understand. Whereas if it's not capped, the builder can decide, and as market changes do invoke, there could be additional costs that were not accounted for in the current market in 2026 that the builder can simply pass on to the buyer. And we don't want that to happen to you. The second would be the free assignment. Not suggesting that you should go into this with the expectation to assign, but it certainly leaves an opportunity for you to do so if that's what you'd like to do. And then thirdly, as something massively important, is the right to lease during occupancy. Why is that important? If you're an investor and you've dealt with pre-construction before, you know that there is 2 stages of the closing. There's an interim occupancy, and then there's a final closing. Interim occupancy is typically an undetermined time frame. So what we want to do is to make sure that as an investor, you're not paying for that mortgage out of pocket, and have the ability to put a tenant in from day one. And thirdly, when you are looking to take advantage of current market opportunities, let's say the closing cost is not something that you want to have built in. What you can do, though, is you can reach out to our team. Andrew and Gurpreet can both review in 2026 what the best options are to reinvest, and that entire 20% down payment can be extracted from your investment property and redeployed in new projects. Okay, really, really exciting fact.
Thank you, Mac. Okay, guys, so we've picked a small 2-bedroom unit. So just to give you an idea of some of the pricing that we've got here, this unit was selling and has sold previously at almost $810,000. We've knocked off just over $54,000 for you, and you can get the same unit now at $755,000. Going through real quick, the full deposit 20%. You'd require $151,000. This unit at a 4% mortgage rate, when you're needed at closing, would carry for around just under $3,900, right? And if we can go to the next slide. So what does that mean for you as an investor? Well, remember that price appreciation on this unit, we're looking at around $94,000 of increase in price growth. That's an 83% return on your 20% investment. Okay. The monthly cash flow, the rents you guys have heard in the news are just astronomical these days. The current market rent for a 2-bedroom in the neighborhood is somewhere around $3,800. Projecting the growth on the rent side to closing at late 2026, early 2027. This unit, I think, will probably rent for around $4,150 a month. Again, it's going to cost you just over $3,900. So you are going to be cash flow positive $281 a month. Now, if typically people would take a 5-year mortgage, I believe, Mac, you can speak to that, but those cash flows will add up to just over $18,000 over a 5-year period. You're still getting that price growth for an additional 5 years. That's another $184,000 in equity in this unit that you've purchased. And while you have it rented out, that tenant is paying down your mortgage. And that pay down over that 5 years is going to equate to another $60,000 or so in equity. So at the end of 5 years, you're going to walk away with almost $250,000, guys, in equity, additional equity, by taking this unit and renting it out to a tenant. Right? So Mac's highlighted. Mac, did you have anything else to add on that as an investor who's, what they would do in 5 years from then?
Yeah, absolutely. And I think I want to comment as well on the fact that in the current market, and especially the fact that we best support investors, we are always very tuned to the need right now for a cash flowing property. When you're assessing the need of an investor, there's really 2 primary benefits that we want to explore. And often those benefits don't overlap. Whereas there are certain markets that are very competitive on cash flow, and there are other markets that are very competitive on the actual appreciation. We've actually been able to hit both of those on this project. Not only are you cash flowing for those investors that simply won't invest unless there's free cash, but you're also investing in a market that is very steep in its incline and absolutely going to appreciate very, very rapidly. What I would suggest, though, for the average investor is that what we want to do is make sure that their clear path is understood, understanding what's the long-term plan for this property. Do we plan on extracting cash and using it to re-leverage for other properties? Are we simply looking for the lowest payment moving forward? Or is this something that we're going to be looking to buy and then to sell? The mortgage solution that we ultimately take needs to be flexible and line up with that investor's game plan. So when you're thinking about making a project investment, let's do a consult, have a personalized plan put in place to ensure that you're not exposing yourselves to a larger penalty at some point, or even restricting your ability to access funds when you need it.
Awesome, Mac. All right, guys, I know some of you are probably thinking, why now? And the reason we've never pushed pre-construction very hard in the past, Mac touched on it, the spread between what you could purchase in resale and the premium that you were paying for those projects was much too wide. There were units just last year, The Well, a really nice building by Tridel, fantastic development in downtown Toronto, selling for over $1,500 a foot when you could buy a resale unit for around $1,000 a foot. And what we have now is we've kind of hit the bottom of the market, or very close to the bottom. And that's why the opportunity is now, because I think over the next 3 to 5 years, we're going to see that price growth that you see in this chart. I took the historical growth from beginning of 2017 to beginning of 2022, just to show you how brand new condos grew in terms of price per foot. And I think that's where we are. I don't think we're going to have as drastic an increase. I don't think you're going to see a 35% return in 5 years. But I do think that you will get a very good double-digit return there, probably in the 10 to 15% range. And that's why we're really pushing. Again, this project meets your location needs. We've got some great incentives, especially on the pricing side. And then we have that upside on the price growth over the next few years.
Yeah, I just want to jump in. Like, we have these units, that we're selling at, $1,250, $1,300 a square foot. And we have them now with exclusive with EXP and the Rise Group, anywhere from on the super low end, like $1,080 a foot, upwards to, $1,150 to $1,200 a square, obviously depending on the size of the unit. right? But if you guys are interested, like we have all the material here for floor plans, price list, the whole kit. And if you are interested in going over a particular, case study with yourself, if you have a unit that you like for, perhaps your child, son, daughter, maybe they're going to school and you wanted to buy them something to go to like the Lakeview Humber campus. Let's run some numbers. Let's go through it. Let's see what makes sense, what kind of floor plan makes sense. And then if you want to rent it out afterwards as an investment, when they're finished up school, there's lots of options. We got downsizers from the area that are selling, 2,000 square foot homes, and they're, retiring in a, 1,100 square foot 3-bed unit down by the lake. So, there's lots of options that we have, particularly in this project. But if you want to talk any and all things condos, and please reach out and give us a shout. And if you need some money to buy any of these condos, that's your guy to talk to. So yeah, we really appreciate you guys coming in and taking the time to watch the little webinar we got. We're going to be doing these more frequently. So if you missed this one, we will definitely be on the socials. We'll definitely be pushing it a little bit more. You can drop us a call, text, email anytime. Get your name on the list, and we'll start pushing out invites to webinars on a weekly and monthly basis.
Outstanding.
And guys, if you want to reach out to us, our contact information is on the screen. Highly recommend Mac Phillips for your mortgage needs. The guy's a rock star. As you can see from this webinar, he really knows his stuff inside out, and he can handle the most difficult of deals. So highly recommend him. And we're here for all of your residential or commercial needs as a real estate group. And we've got agents all across Ontario and actually the country as well. So if you're looking to relocate to a new province, we've got people basically from east to west. Right? Thank you, guys.
Thank you, everyone.